Hey everybody, this is Dennis Baldoff with the Baldoff Group at John L. Scott Real Estate here in Silverdale, Washington. Welcome to my first ever video market update for the real estate market in Kitsap County. What I'm going to do today with you is to go over a few things. The first is I want to talk to you a bit about the history of our market locally here as well as the country, but more specifically our local market. So I want to give you some history. Over the last 12, 15 years, so that you get an understanding of where we've been, where we came from, and sort of why we've ended up where we are today. And then we're going to talk more specifically about where we are today, what's happening currently in the market. And I think this is an important time to do that because we're at a bit of an inflection point in the market. Some important small changes are beginning to happen that I think signal some bigger changes coming up in the future, and we'll talk about those last. We'll talk about what does the future hold for us, where's prices going, where's inventory going, what's going to happen when we hit another recession, because we're going to hit another recession. So that's the plan. I want to give you all this information because I'm hoping that this information will help you in making your decisions. You're going to come to a point at some point where you're going to think about or need to think about selling or buying real estate, or maybe you're thinking about investing or whatever it is. The best way to make those decisions, of course, is with good local information. And this is going to be local. We're going to be talking about Kitsap County and what's happened here in the county specifically. But just like every market is different and local, your specific circumstances are going to be different as well from everybody else's. And that's going to change how the market influences and affects what you should or shouldn't do and the decisions you make. So when you get to the point where you're going to want to make those decisions and you need good information and perhaps some input on what the options are and what the potential ramifications of those choices might be, give us a call. Happy to talk about this stuff ad nauseum. I think people know me well enough to know I'll talk about this all day long. Anyway, that's the point of it all. So let's get started, and let's start with the history. Let's take a look at some long history here in the county. And I apologize, these graphs I'm going to show you are a little bit small in the video. I get that, but they're on the website here if you want to take a look at them. But we'll talk through them here in any case. So this graph represents the active inventory, what's available for purchase month after month from about 2003 to today. So a 15-year period, so that's quite a long period. And it's interesting to note, you see, coming into the bubble here, we started to drop inventory and we got fairly low. We bottomed out in about 2005, the winter between 05-06, and we bottomed out at about 714 units. So that's not very many, but as you can see, when the bubble busted a couple years later in 07-08, the inventory just skyrocketed. It just went through the roof. Everybody was still hopeful. Maybe I'll sell, maybe I'll sell, maybe I'll sell. Well, very few people were selling. I mean, we got up to almost 3,000 units available on the county. That's a lot. A balanced market for us is closer to about 1,500 units, about half that, or about double what it was at the bottom. So we blew right through that middle and had just this huge amount of houses on the market. Well, we all know what happened next, right? The banks started to take houses back because people couldn't make their payments. The economy was falling apart. That's what this drop is here. That's that initial big drop. And then we leveled out for a couple years. The banks were taking things back, but they got sort of tired of taking things back, so they weren't taking as many back. But sellers weren't putting their house on the market. They knew better. It was a bad market. If you didn't have to sell, you didn't sell. And I was giving a lot of people that advice at that time. I was saying, look, you don't have to sell. Keep a hold of it. This market will turn around. And sure enough, it did, but it took a while. So we had another little bit of a drop. We had a bit of a resurgence in the market as the economy began to recover, and some of the early adopters went ahead and started buying again. But as that happened, people and banks began to put their houses back on the market again. So even though we had some demand happening, the inventory was really not affected. It was pretty consistent for about 3 years there. Then the demand really came back. The economy recovered. People wanted to start buying in earnest again, and we had like a 6-year, 7-year period here where people weren't buying. So there's 7 years of demand, pent-up demand sitting there that just came out of the woodwork and started to really absorb our inventory. And you can see it just dropped and dropped and dropped over the next 3 years until where we are today. So that's historically what happened in the long picture. And taking another look at it just from a numbers standpoint for the fun of it, here's a 10-year graph of essentially the same thing. The interesting thing that I want to point out is that when we were in the bubble, I said we bottomed out about 714 units. Okay, this February, one of the days, I look at these numbers almost daily, one of the days I looked at this number in the entire county, there was 327 units available. That was it. Any price range, any condition, condo, townhome, mobile on land, stick-built home. If you wanted to buy a property in Kitsap County, you had 327 choices, and that was it. Now, as a perspective, there are about 1,065 agents in the county currently. So that's not very many listings per agent, and certainly not very many listings per buyer. So that's where we bottomed out here this February. Currently, we're sitting at about 811. So the interesting part is, until this summer, even last summer, we were topping out below where we were in the bubble. Now we've broken through that. So just an interesting little side note. So that's what happened over that 10-year period. And of course, we all know what that did to price, right? I mean, during the bubble here, prices were going up, 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 up really sharply. When the bubble burst, of course, they started to drop off, drop off. Here was that period of time where we had inventory stabilize for a little bit and then drop off again. That was during this period here, and we bottomed out on price in 2012. When you start looking at or listening to people tell you when the market bottomed out, this tells the story right here. Now this is price per square foot, and I did that on purpose. It sort of eliminates the changes that would occur, or the inaccuracies that would occur in the graph if we were just looking at average sale price or median sale price, because those don't take into account the size of homes that are selling and so on. Anyway, the graphs are very similar, and they both bottom out right here in the winter of 2012. So that was the bottom of the market. We had a bit of a slow recovery, and then in about 2015, about 3 years ago, our military buyers came back into the market. Up until that point, military people were buying, but not very much. And of course, here in Kitsap County, that's a big deal because they're a huge part of our community. And if they're not buying, then the demand isn't as strong as it could be. So a combination of things happened in 2015. Everybody finally began to feel like, yeah, the economy's recovered. I'm feeling good about my job. The military people began to feel good about housing and housing prices and the idea of buying one. And then we had still a chunk of those people that were that pent-up demand that were still out there looking and buying. So demand went through the roof starting in 2015, and that's what drove these prices the way they've been driven thus far, just up, 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 up. Now, last year, or from last year to this year, the average price increase has been about 6.8%. as compared to the average price increase last year this time of closer to 10 or 11%. So that's an important distinction, an important point to keep in mind. We're not gaining as much equity over this last year as we did the year before. That's part of that inflection point. So now let's take a look at what's been happening a little more recently and sort of currently what's going on. And one of the first things I want to talk about is how many houses are selling. This is over the past 3 years. These are the pending sales, and if I was to show you the closed sales, the graph would look very much the same, slightly different numbers, but the same. And the interesting point to note here is for the past 3 years, boom, 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 each year selling more and more, even though, as we saw earlier, the inventory was going down and down. More and more sales happening. That's that demand coming on really strong. And that's happening even at the low periods of the market as well. Even though those are the low periods in the winter, it's more and more and more activity. Now, interestingly enough, look at this here. Right now, our buyer demand has backed off a little bit, and we're not seeing as many. Some people are going to tell you this is because the inventory is so low. Well, we just looked at that too, and we've decided that the inventory is a little bit higher maybe than it was last year this time. So I don't believe this is an inventory issue. I believe this is an issue with buyer demand. It has softened slightly. Not enough so that we're going to jump into a buyer's market or have an explosion of inventory, but it's something to pay attention to. So that's the sales that are happening now. They've tapered off a little bit. That's something for sellers to pay attention to. So that's pending sales. Along with that, let's take a look at what's been happening to market time then. So as the demand was increasing, the sales were increasing, the inventory was dropping. Of course, the days on the market was just coming down, 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 down. Same sort of a story. The interesting part is it's still dropping. This is a statistic that has not shifted directions yet. So currently, the median days on market is 12 and the average is 30. Now what does that mean? So the median means that half the houses that were on the market sold in 12 days or less, or of the ones that sold, and the other half sold in more than 12 days. Now, interestingly enough, that other half sold way beyond 12 days because the average is 30. That's what that difference means. Because the first half sold quickly, that under 12 days, the other half took quite a while longer to sell, so it drags the average in that direction. So again, the story here is you want to sell quickly if you can. That's your best bet. Otherwise, you're sitting on the market for quite a while longer. Now, this did bottom out at a little bit shorter time period earlier this year, but that's still quite low, and you can see it's still a reduction from year over year. So that's a statistic that, or a metric that hasn't changed directions yet. So that's happening on days on the market. Just as an interesting aside, that's pretty much true over all the price ranges. This is broken down by price range, and the different colors are different price ranges. The purple, the one that's really the outlier here, is 600,000 or more. Those are the really expensive homes. They're going to see more volatility in pretty much everything, in average price, in days on market, etc. But all the rest of the market's pretty consistent, and it still holds true that the average time on market's going down, down, down. So that's happening as well. So what does that mean for price? Well, at the moment, not much yet. It's still going up. So this is over the last 3 years, the average price per square foot. And again, we do the price per square foot so that you get rid of any aberrations from different size houses selling and from the higher end houses selling and dragging that number around too much. But you'll see just over the course of the years, it's gone up, 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 and up this year as well. So despite what's been happening just this recent year, just this summer, as far as a couple of the metrics turning around a little bit, prices are still on the march up. So that's what's happening now. So let's talk then about what does that mean about this coming year. I've sort of covered up my future, but what does that mean about this coming year? Well, I don't have graphs for that, so let me just give you some thoughts and opinions. Our inventory is still historically low. It's right around where it was the lowest when we were in the bubble. So we don't have an oversupply yet, but supply seems to be making a little bit of a turnaround. I expect that to continue, and I expect us to see a little bit more inventory next spring and summer than we're seeing this summer, late this summer. So inventory is going to go up. I expect buyer demand to continue to be a little bit soft. I think it'll resurge in the spring, but I think it'll be a little bit soft because interest rates are still going up, and that's going to have a pretty big impact on a lot of buyers. So that demand is going to soften a little bit. Inventory is going to come up a little bit. All of that means that while we will most likely still see some price appreciation, it's going to be quite a bit less than what we've seen in the past couple of years. Now this is in line with what a lot of the big thinkers in the country are saying as well. So no real big surprise there, but it seems to be holding very true here locally. How long will that last? That's a good question. Don't know. My anticipation is that we're not going to top out next year, but we probably will the year after, and I don't expect much gain that following year. So whatever gain we see this coming year, that's going to be getting close to probably the end of it. So pay attention, sellers. If you're thinking about selling, it's getting to be time to really think hard about, okay, how long do I wait? Do I jump in before there's too much inventory? Catch some of those buyers this spring as the demand comes up, or something as such. And then buyers, the warning for you here is the interest rates are going to impact you a lot more than the prices do, so don't be shy about it. I know that buyers are starting to push back and starting to feel the pressure of that little bit higher interest rate already and the higher prices. But if you delay, it's not going to help you, because what I see happening for prices overall is something like this. We've been going up and up and up. I anticipate a little bit more up and a little bit more up and then down, but I don't see us coming back down past the point where we are now. I see that turning around before we get there and going back up again. So if you can buy now, buy sooner than later, it's a good time to do that. We'll do another video on that subject alone and take a much closer look at interest rates and how it affects your payments and why it's still a good time to buy even with the lower inventories, probably in a week or so you can look for that. All right, that's it. What's happened, what's happening, what I think is going to happen. I hope that's been helpful for you. Again, feel free to give us a call, ask questions. We love to answer them. And if there's any details here that didn't seem quite clear or you want more explanation on, give me a call. Happy to talk to you about it. Thanks. Take care.